Hello and welcome back to another video. If you're new to the channel, then nice to meet you. I'm Anton and I'm talking about investing. I transparently show you my portfolio and what choices I make with my investments. In this video, we're going to have an overview of my portfolio since last week. Additionally, we're going to be looking at Intuit and Nvidia, since both companies have just reported their earnings this week. Nvidia is not in my portfolio, but Intuit is. And I'm going to tell you exactly what I'm planning to do with my stake in it. Let's start with the portfolio update. This week, account value is sitting at 25,400 euros, with a total invested of 25,000. The return is getting closer to 6,400 euros, and the net deposits have increased by 1,000 compared to previous video. As I highlighted in my first video about the portfolio, the goal is to add 1,000 every month. And so this was my May deposit. You can see that I have 400 euros still sitting in cash and 600 I already invested. Overall, the list of my investments is still the same. And we can see that Google and Amazon are slightly lower than they were in the previous video. SML and Netflix have gained a little together with MasterCard. S&P Global is also slightly higher. Costco and Microsoft are doing more or less the same. Costco is slightly higher than it was before. Booking is more or less the same. Going down to the lower portion of the portfolio, we see Duolingo. Duolingo also is more or less the same, although you may notice that the position size slightly increased. Intuit is now for me 17% in the red, and we'll get to that in a moment. Nike is also more or less the same, and we have an additional booking position for me in euros that I covered in my previous video. Eventually I'm going to sell the one in dollars and only keep the one in euros. That's the state of my portfolio right now, and let's get to the recent buys that I've made. From the history of orders, we can see that on 13th of May, I bought an additional stake in Intuit, S&P Global, Duolingo and Microsoft. I put equal amounts of 100 euros into each one. Then I also added a little to my booking holdings position, and later on, when I saw Intuit shares dipping, I bought an additional 100 euros of Intuit. Now, why Intuit shares were dipping and what's going on? Let's have a look. And for that, I will go back to earnings calendar that we looked at in the previous video. And we can clearly see that Intuit had reported earnings on Wednesday. And if I just zoom in here and also show estimates, we can see that the company beat on their earnings per share estimates and also on their revenue estimates. So from the first glance, it can seem like the story from the previous video, when we saw that companies have beaten on their expectations, but their stock price went down. However, with this one, it's a bit more nuanced. First, let's have a look at how market reacted to earnings report of Intuit. We can see that the price in the beginning of the week was around 403. And on Wednesday, Intuit reported earnings, and after that we can see a sharp decline from $383 to $307. The stock has recovered slightly to $319, but it's still minus 20% on the week. And let's also have a look on year to date, it's almost minus 50%. How can this be when the company beats on earnings and revenue? Let's see what they actually said. Intuit announced that it will cut 17% of its global workforce, which is approximately 3,000 employees. Also, the company lowered its fiscal TurboTax revenue forecast. In their earnings, they also noted competitive pressures in the tax software market. The restructuring and cutting the global workforce by itself is not necessarily a bad thing. Sometimes when companies report workforce reduction, it can cause the stock to go up instead, but in this case, we can see that investors are not very happy with it. This is also more or less when I decided to add an additional 100 euros to my position in Intuit, because at first I didn't see a problem with the workforce reduction. However, afterwards I also saw a YouTube video by Joseph Carlson, and in here he's specifically saying why he's selling Intuit. Let's have a look at the text he's highlighting in here. This is by the CEO of Intuit. Shifting to the DIY segment, I am constructively dissatisfied with our performance. We face pressure among the most price-sensitive DIY filers. We lost on price. So we can clearly see that the CEO brings up the issue of competitive threats. Moreover, the CEO highlights that it has nothing to do with AI, and Joseph also expresses the opinion that you can't know that for sure. In this regard, I'm definitely agreeing with Joseph in here, and I think that the competitive threats have to be addressed, and we will have to see how business model can adapt to it. And together with the workforce reduction, it seems like artificially trying to engineer the metrics so that they can still beat the estimates on revenue and earnings per share. So given that, I do see the potential for AI to disrupt this business model, but so far numbers do not reflect that for me. And so I'm still holding my position, although probably not adding to it too much and keeping the position light, as the risk profile for the company has changed. Joseph did hold this company before, and he was in the red on it for a while now, and eventually he decided to exit the position with $9,000 in losses, given new data that we just learned from Intuit. For me personally, I'm not thinking about selling just yet. I just recently started building this position back up. I'm quite happy with the move that I did last year when I sold Intuit because it wasn't growing. I was thinking to myself that I could re-enter the position at a different time for more or less the same price. So last year I did switch it for Google, which turned out to be a very good investment. And this year I started accumulating Intuit shares once again at a cheaper price than previously. So right now, if we go back to my portfolio and have a look at Intuit, we can see that my entry price is 388 and I'm only in the red by 140 euros right now. Also note that the total position for me in Intuit is less than 3%. It's less than Duolingo even, and it's bundled together here with my 3 riskier bets. I probably wouldn't want to grow it much larger than 3%, given that there is more uncertainty now with how the company will be adapting to different changes and addressing the competitive threats. And also given the seasonality of this particular stock, you need to wait more or less a year to see the results of their efforts, because most of their profits are coming from the TurboTax software and taxes are being reported once a year. So in general, I recognize the concerns that different investors have about Intuit now, but for my portfolio, it's such a small position that I started building already after the price was reduced this year. So I'm willing to wait on it and see how it recovers. Because in general, I try to hold positions in my portfolio longer than a few months. Ideally, my investment horizon is 15 years into the future. Another company also reported earnings on the same day with Intuit. This one is not in my portfolio, but the company is Nvidia. If we switch estimates on, we can see that they beat both on earnings per share and also on revenue. And already from this chart, we can also see the astronomical growth of this company. And if we go to company details, we can see that they not only delivered on the expectations, but they actually crushed estimates. Nvidia reported record revenue of 81 billion, sharply above Wall Street expectations, reinforcing the strength and durability of AI-related demand in its core business. We can also scroll down and have a look at some metrics of Nvidia. It is the biggest company with market cap of 5.2 trillion. For multiple years now, it's crushing expectations. We can see the stock price in the past 5 years or 10 years and the returns it had. We can also see revenue, and on this graph it's just exponential. It went from around 6 billions in Q3 of 2021 to now having 81 billion in revenue in 2026. Any other metric like net income or cash flow or stock-based adjusted cash flow even, or EPS, everything is growing exponentially for this company. Meanwhile, it's also increasing its cash pile. It's now sitting at 80 billions with only 7 billions in debt. The company pays dividends, increasing dividends. The company also buys back its shares. We can see that shares outstanding is slowly going down. And also we can see it visualized on this graph that shows the return of capital. And Nvidia definitely returns money back to investors in a way of dividends or common stock repurchases. However, what stops me from buying this company is its continually high valuation. For the past 10 years, it's usually around 40 to 50. It even went up all the way to 240 PE ratio, and now it sits at 32. And in terms of free cash flow yield, it is currently also at 2.2, which is not the highest that it's been. But right now, with this kind of astronomical growth, I don't know how much Nvidia can grow further to justify this valuation for me to enter the position. Funny story, I actually used to have Nvidia in my portfolio, and as you can see, I sold my entire position of 200 euros that I accumulated during April till around July of 2022, and I sold it in February of 2023 for an enormous profit of around 2 euros. I wanted to make a dedicated video about some of the past mistakes that I already made with this portfolio, but since I'm talking about Nvidia, I decided to mention it right away. And just to put it into perspective, let me show it to you on a graph. So 2022 April, that was my first buy of Nvidia, and in 2023 February, I sold it. And then since February 2023, it went up 900%. So definitely a huge missed opportunity in there. But also at the time, I felt that my decision is justified. I entered into a position, into a company that I didn't know much about. I knew that they were manufacturing graphic cards for the consumers. I didn't know much about their business-to-business solutions. I couldn't foresee the massive growth of AI at the time and massive compute needs for it. And also there were news about Nvidia GPUs not making such a huge progress year over year. The improvements in performance are not that drastic anymore. There were some questionable marketing practices and lots of rules to follow not to criticize Nvidia GPUs for YouTubers. And now Nvidia is the largest company with the market cap of $5.2 trillion. You live and you learn. Okay, this is everything I have for you for today. Thank you for joining, and I will see you in the next one. Thanks. Bye.